For IBM, what started as unrequited love just a week ago turned into real romance Sunday after Lotus Development agreed to be bought by Big Blue for $3.5 billion, the largest purchase ever in the software industry. The final price is about $220 million more than IBM offered last week, and swiftly concludes its first hostile takeover attempt. Industry analysts had bet IBM would need to sweeten its original offer to clinch a deal. Big Blue now gets a boost by being able to sell the popular Lotus Notes software for sharing data and working in groups. It also gives IBM a chance to improve its lagging OS/2 operating software and help level the playing field where it competes with Microsoft. But while it's a good first step, analysts are still cautious.
What IBM really needs to accomplish is to establish a 25 to 30% market share for OS/2. The acquisition of Lotus is not enough to do that.
One surprising note, IBM says Lotus Chief Executive Jim Manzi will stay on with Lotus, becoming a senior vice president with Big Blue. Lotus will also retain its own name as well. The merger agreement comes after a week of intense negotiations between IBM chief Lou Gerstner and Manzi. And with no other suitors appearing, IBM gets what it's been after for 5 months.
This transaction is absolutely in the interests of both shareholders, in the employees of both companies, and most importantly, both of our customers.
There are concerns Lotus might lose its unique corporate culture by merging with a mammoth computer maker. But both chief executives have no intention of changing what doesn't need to be fixed.
They're going to try to keep the company intact as an independent entity and as the focal point for software for IBM, and try to keep the culture as it is, which is very critical.
IBM expects to take a charge against earnings for the deal, but still doesn't know how much. And though it may take several years for Lotus to turn a profit for Big Blue, going forward, IBM is making a strategic bet that software is the key to its future growth. Tim Tyndall, CNBC Business News, New York.
Software company, the two chairmen have shaken hands and initialed a merger agreement. Scott Gervey has more.
Just 1 week ago, Jim Manzi and Lou Gerstner had some very unfriendly things to say about each other. Sources close to the Lotus-IBM negotiations say for now the positive feelings are genuine. In addition to sweetening the bid from $61 to $64 a share, IBM decided to leave Lotus CEO Manzi at the helm of its newest division, making him an IBM executive.
We have been a company that, we're a tremendous company that recently has been struggling a little bit to find enough resources to invest in our vision around team computing and led by Notes. And Lou has assured me that we're going to have all the resources we need if we make a plan that makes sense to get them.
Even Lotus employees who have been critical of their CEO in the wake of losses and cutbacks say he is the best person to foster the growth of the Lotus Notes technology, and they are encouraged by the strengths IBM brings to the combination.
Everybody wants to see Notes to be a success, the programmers especially. They believe that this combination is going to allow Notes to accelerate the adoption rate of Notes. And the designers who have been working on this for the last 10 years want to see that.
This merger also produces a formidable competitor for Microsoft, which is working on products similar to Lotus Notes.
So our target is to serve our customers. There are lots of competitors out there who have products that are relevant to this marketplace, but none, we think, that has the combination of Lotus and IBM.
For a man originally criticized as an effective cost cutter but lacking in vision, Gerstner's aggressive acquisition of Lotus and his strategy for making Lotus Notes the glue that binds enterprise computer systems together is leading many industry pundits to stand up and take notice. The final price tag on Lotus is $3.5 billion, making this by far the largest deal ever in computer software. IBM will be taking a special charge in the quarter in which the merger closes. Scott Gervey, Nightly Business Report, New York.